it's as organic gets. And I think that it's a testament to the investment in the brand itself. I think it's a testament to not deviating too much from our initial marketing strategies, which were like, what's everyone doing and what can we do differently?
Welcome to Culture and Capital, a SoFi podcast and a Cashmere production. We're giving everyday investors insight into how innovators build brands, influence culture, and maybe even generate some capital, helping you align your money with your values. I'm your host, Katie Perry. A few quick reminders, and then we'll get right into it. The information in this show isn't financial or legal advice, a recommendation, or an endorsement. The opinions expressed in this content are those of the show's guests and hosts and do not necessarily reflect opinions held by SoFi and or its affiliates. SoFi does not endorse or guarantee any third-party product and does not recommend any brands or companies discussed. Cashmere's funds are available via SoFi Securities LLC, member FINRA. SoFi receives compensation from the sale of these funds. We are here with a very special guest. We have Andrew Benin, CEO and co-founder of Graza. If you don't know Graza, you're under a rock. You guys are the hottest olive oil plus more company around. Andrew, welcome to the show. Thanks for joining us to tell us about your journey at Graza and just perspective as someone who's building in the startup space.
Thank you so much for having me. Obviously a huge fan of what you guys have built as well. Honored to be a part of it professionally. And yeah, we're having a great time here at Graza. Happy to share anything that I can to inspire the next generation of founders and investors.
I gotta say, I got so excited. I saw you guys in Wegmans. Wegmans is like my grocery store. I saw a wall of Graza and I was like,
Wegmans is like the example. And that's what we should be doing podcasts about them, actually.
I will start one with you.
You know what I mean?
I wish they were publicly traded.
They have longevity in their employee base. They have, in our world, something that's called a EDLP model, which is like everyday low pricing. So none of the tomfoolery of like promos and on sale and off shelves and everything else that you need to pay for. Just like, no. Give us your best price and then like don't talk to us for a year and like let us take care of selling it like wildfire. It's a great model.
They're not trying to pull the wool over your eyes. You know, they're nice upstate people, upstanding upstate people.
Yes.
I want to go back to that in a bit because you guys started D2C and then you rapidly expanded into retail. But let's go back. Let's go back to the spark of the idea. I know you're in Spain right now. Mm-hmm. And I assume that's where the idea for the company came about originally, but tell us a little bit about how you got into this. You have background in a lot of blue chip D2C companies. Why olive oil? How did this all come about?
Yeah, I mean, I worked at a lot of consumer brands, Warby, Casper, Magic Spoon. And like, I don't know, I think CPG, like we are our kind of just glorified salespeople. You know what I mean? Like I'm a really good used car salesman and like used car salesmen get shit on all the time, but really, I mean, it's hard to sell a used car. It's hard to sell a bottle of olive oil. And like, I think working for those blue chip companies, like you mentioned, you're orienting your entire creative state, functional state, personality, because that's like they're fun startups around a product. And I wasn't really passionate about those products that I was committing my energy or my career to, but I was really passionate about food. After Casper, I'd spent some time cooking at Gramercy Tavern in New York. I went to Spain. My wife is from Spain. And I think there were like two paths you go on when you go to the Mediterranean. One is like, oh, like I'm going to be an Instagram star and tell all my friends about this boat that I rented in Menorca that has a refrigerated table where my cava is. And like, that's what I'm going to bring back to Lake Tahoe and sell to all the bros, you know? And the other path is just like, being a bit more, I think, realistic and observant that this culture is this culture and our culture is our culture. But there are certain things like olive oil that actually fit into both. Olive oil is super transient, has really high household penetration in the States already. United States is the biggest importer of olive oil in the world, albeit not the highest consumer per capita. So a lot of the base of like why you want to start a company here and invest in it is actually really strong. Then I tried a specific olive oil that I fell in love with and became obsessed with the product. And there was just alignment between what I was going to spend most of my time on and most of my time thinking about in a category that I loved. Olive oil has no enemies. Like no one hates it. You get pretty
Yeah, that's
crappy.
true. No one's like, oh, hold the olive oil. That doesn't
Exactly. You
happen.
get it at Olive Garden, they give you olive oil and breadsticks, and you're like, hell yeah. At
Yeah.
a Michelin star restaurant,
We
they
got to
give you
get
burrito.
Graza and Olive Garden.
That's what I'm saying.
Uh,
That's what I'm saying.
if I can
Yeah.
support that in any way, let me
Yeah.
know. I'll request it.
Yeah.
But it's a specific olive, right? In the
Yeah.
specific part of Spain that you're
Yeah.
like, this one. I've had a lot of olive oil in my life. This
Yeah.
is the guy.
Yeah. I mean, there was a belief that the American consumer, right? There was such a over appreciation of consumer data, right? Of like, this is what the consumer data is telling us. Consumer data tells us that American consumers like buttery, plain, non-aggressive olive oils, right? They want it to taste like butter. Meanwhile, the Mediterranean is like, no, 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 we like our throat on fire, high polyphenol, I'm coughing, why am I coughing, olive oil. And it was just like, we're just going to consume all the good stuff over here in Europe, and we'll export all the stuff that meets that flavor profile, which really is the inferior stuff, to the US. So there was kind of this like dumping ground thing that we wanted to solve, but I don't know, it's not the main problem. The main problem was facilitating joy in like a really stodgy category, which was like
Yeah.
olive branches and olive trees and pictures of farms and Italian sounding names. And now I don't even know where it's from, but it sounds good. Like
Well,
that was
let's
the
talk
problem we were
about the
trying to.
bottle innovation
Yeah.
because that's
Yeah.
part of the product, right? The
Yeah.
squeezy bottle.
Big
Was
time.
that always in the cards as you were like in the olive field or grove, whatever it's called, and you're like, I'm
No,
gonna
I had
squeeze
no
this out of a bottle, or how did that come about?
had no idea, to be honest. It was one of the last things to happen. So the original idea was all rooted in quality, varietals, use cases, sizzle, drizzle, one for cooking, one for finishing, and then the squeeze bottle came really late to the party. And
It just
even though
makes
we
sense though.
Yeah, I mean, I used it literally at garde manger in restaurants, like using little tiny squeeze bottles to put basil oil on some microgreen, whatever, you know? So even from using them in restaurants, it didn't click that this could be a ready to use tool at home. I mean, a big differentiator in an antiquated category, but it came later. Everything was originally rooted in product quality, but the squeeze bottle, despite what we wanted it to be, ended up being like our biggest differentiator. It was kind of like we lost control there. People saw it, they were like, holy shit, that's different. We didn't want that to be the only differentiator that people latched onto for a while, and now has caused 150 other brands to launch a squeeze bottle. Like that wasn't our goal.
Yeah.
But it was a big shortcut for us, a big first mover advantage, a big differentiator, and definitely part of why Graza has had the success that it's had.
And a good wedge. I mean, I saw your squeezy bottle mascot on TikTok back in the day, roaming the
Yeah.
streets.
Still on
It's not that couldn't happen on a glass bottle. That just not as fun.
No, that you wouldn't get the message across. Yeah, it wouldn't be as fun. I
It
mean,
would
yeah, I
be
mean,
dangerous, perilous even.
no, the emotion that the brand is trying to convey is well captured by the format that it launched in, right? If you were like, we're all about fun, we're about function, we're about chefs, and we're about cooking at home, and then you just like launch in this glass bottle, it's like
Yeah,
it doesn't match.
doesn't
So
work.
the format matched the brand message. It was fuel of fire, you know?
Yeah. And I remember, so going back to the expansion. So when you guys first came onto my radar, it was direct to consumer. I think there was like a subscription option I signed up for because I was like, gotta have it every
Yeah,
month. So,
thank you.
most D2Cs, it takes them a long time to get into stores and it's hard for people to navigate that. It seemed like one day Graza was just occupying a lot of shelf space everywhere.
Yeah.
Can you tell us about how that works? Because those two types of commerce are very different, right? From how you run them and manage them. So
Yeah.
when did you build that second layer and how do you think about managing both of those at the same time?
I mean, we built it before we launched. It wasn't reactive. I think that, we had our Costco margin structure built out, 6 months before we launched. So we started with where we knew we were going to go. And I think that although D2C is so attractive, especially if you can budget for like a 24-month LTV payback period and like really get aggressive on some of your spend and some of your funnels, I mean, those are beasts of business, like Athletic Greens and I mean, it just doesn't get better. I mean, that gross margin profile, that's a dream. Graza wasn't built that way. Graza was built to have a marketing attribution model that supported the fact that we were going to spend this capital digitally one way or another. So we may as well capture some of the revenue and not beat ourselves up to the same criteria as to how efficient it was going. We were going to advertise on Meta anyway. We were going to do influencer marketing anyway. D2C for us became a short-term revenue capture, which is really strong for cash flow needs early on. And now we figured out that if we get the right team, the right investments, the right retention strategy, the right loyalty strategy, the right subscription strategy, yeah, you can build a $30 million subscription business because you have control over your pricing on your site and your merchandising digitally that retailers don't. Once your product's out there, even if you thought you were selling it into whatever retailer and they were going to have it on shelf for $15, maybe they put it on shelf for $22. All they care about is what price their distributor is selling it to them at, or you're selling it to them. You really have no controls over what happens on shelf. On your site, you have, infinite controls. We can sell trios and 2-packs and 4-packs and special things on our site that we could just never pull off in store. So they both serve a really important purpose for our creative engine, our marketing engine, our peaks and valleys that we can better control on D2C by investing against it and planning LTOs that you just can't do on yearly review cycles in physical retail.
Yeah, and when you were cutting your teeth in D2C, it wasn't as, at least from my point of view, it didn't seem like it was as integrated. But what you do give up when you're strictly D2C is almost the flywheel effect of someone could also discover you in the store because you have a beautiful brand. Every time I see you guys, it's like a big patterned thing. It's visually arresting.
Yeah.
So you give up on the margin by working through retailers, but you're more discoverable. And so it's like, as a founder, you kind of have to make that call. What's better?
Yeah. Yeah, you don't give up that. Like high AOV categories like D2C is just a dream, right? If you can average order value.
Okay.
So if you have a high initial average order value, you have a D2C business on your hands because you're just acknowledging there's hundreds of millions of people in America, or maybe you're going to ship internationally. I just need to cover 0.5% of them as my potential consumer base. And I just have to tap into their emotions at the right time on an ad, some kind of need that they have. And all of a sudden they've purchased a hydroponic farm from me for their backyard that cost $1,000. That's just not us. We're about daily consumption, weekly consumption. The vitamin companies make a lot of sense for D2C for that, or supplement companies. For food, like people are buying olive oil in stores.
Yeah,
it's just
it's
that's the real estate. So I don't know. A lot of Graza is like not swimming upstream. It's actually swimming downstream and being really good at it.
Yeah, I love how you put that. I think part of what doesn't seem like it's swimming downstream is just the logistics of running this. So you work with a lot of small farms in Spain, right? But the company's based in the US. I think there are a lot of companies that they'll manufacture something in one place, ship it one other place, it goes. This seems like a little bit more of an operation.
Yeah.
So how do you balance, product consistency, meeting demand with working with these farms that you've essentially handpicked by virtue of going there and discovering this product by tasting the product from these farms?
Our inefficiency is part of our keys to success. Scaling inefficiency, I think, is what we're looking to do here long term. Our buying power is larger now, the larger we become. So it's become a little bit easier, but we are the antithesis to this industry by far. Everyone has, 300-ton tanks, and Graza has like measly 50-ton tanks because we're like, whoa. Like, I'm only capping my lot at 50. I'm not just going to throw a bunch of crap in there and then just hope that it all tastes good when it's all been blended together, even though it all has different profiles, right? Like we just don't work that way. So think of a city, like other people expand vertically and like we're expanding horizontally because we're just being more thoughtful about acquiring these plots of land around us rather than just going up.
Yeah. Is that a story you actively have to tell your customers, or does that just come across in the consistency of the product?
I think both. I don't think all of our customers or our potential customers really care, but I think modern marketing, you have to be able to tell 15 stories to like 16 different segments of people. So if we stop telling it, it would be a disservice to the people that do care and come to us. But we don't do it as a marketing angle. We do it just because, I don't know, selling one of anything Not that hard anymore. Like you can make an alpaca sweater and like put some money behind Etsy ads and like, right, you could probably sell one. Is anyone going to come back to buy a second alpaca cardigan from you? I don't know. So,
I got
so
7. I don't know
yeah,
about.
yeah, exactly. So for us, like selling one bottle of olive oil literally makes no sense.
Yeah.
Like we have to sell 100. We have to be a generational consumer category,
Right.
right?
You're
Like
trying to get a fan and not just a customer,
anyway,
basically.
just like if you buy Kerrygold butter, that's what we need. We need someone that's just like, oh, I go there, that's what I get. I don't care what's on sale. I don't care about trying something new. Like I know that stuff is good. It's part of my routine. So it's just different. We do it. We do it because the taste and the quality price ratio is like everything to us, you know?
Yeah. And so even beyond the product, the storytelling is interesting because on this show, we talk a lot about building consumer brands early stage. And like a lot of our investors that listen, they're used to looking at the fundamentals of Pepsi, Yum brands. This is a much different place you're in. And part of, I think, building a consumer brand now is fitting within culture. And you guys have done a great job of just finding yourself in these viral moments. I saw Dua Lipa
Yeah.
on your Instagram, and then in the Financial Times, like Sam Altman's randomly like, here's what I cook with. How do those things come about? Like, are those organic? Do you have a team that sort of plans them out? And
Yeah.
how does that kind of influence drive more interest in the product?
Oh, it's as organic as organic gets. And I think that it's a testament to the investment in the brand itself. I think it's a testament to not deviating too much from our initial marketing strategies, which were like, what's everyone doing and what can we do differently? Like everyone sends the same emails with the same discount codes, same offers, runs the same ads because that's what works, or they think that's what works, or you leverage what's working. You go through Facebook Ad Manager and look through archives and be like, oh, we'll just recreate that. Like Graza was like, no, let's bottle all of that and do things completely differently. That was our kind of marketing thesis early on. It's different than Liquid Death, which is like absurdity, right?
Yeah.
Truly masterful absurdity marketing. So I think we've stayed true to it. I think people would think it had a bigger impact. It really doesn't. Like Sam Altman posts, like sure, Twitter lights
The
up.
VCs are all buying it,
They're all
which is
behind.
it's just a great audience.
But yeah, but they're actually not. Like our website traffic spiked more when like some influencers that have 100,000 followers that are rabid food content consumers than it was when Sam
Yeah.
Altman posted twice. So like, think it's a bit overstated the impact that some of those cultural moments can have. I think it's table stakes now. Like, it's no longer a key unlock. It's table stakes.
What you're getting at with the influencers is something important we've talked about in this show. It's like just alignment of somebody who's influential with an authentic connection to the brand. If Sam Altman had been hyping some new AI tool, I'm sure that would have gone off because that's what his people want to hear about.
Yeah.
Are there any, so yeah, Sam Altman, Dua Lipa, are there any other big name fans you can tell us about, or is that all top secret?
I mean, there's no secret. We definitely had a early stage love affair with Molly Baz. Like she came on, she posted like day 2, and Whole Foods reached out the next day, and now Molly's launching her products into Whole Foods. So there's
Awesome.
a good triangulation happening there. Like it was so strong that like one of our competitors just like took her and paid like they took her out of our equation just by being like, no, it's obviously working for Graza. Like, so she was huge for us, and we would love to work with her again. And other big names, like big moments that
I mean,
really,
I know that's PII. I've asked you if anyone else has disclosed. I mean, you got the CEO of the hottest AI company in the world and Dua friggin' Lipa. I mean,
they're pretty big. Honestly, they're pretty big.
not bad.
Those are definitely global celebrities. Yeah.
And they were the ones posting about it. Like, there's people who are not posting about it.
I like. There's also other stuff that happens that we know people's private chefs just by casing, because we just look at their addresses on Google like creeps. We're like, where is this stuff going, and whose house is this? Holy small! So like,
you can't share here. I won't let you share here, just for the safety of yourself. And but it's very cool. And you talked about chefs. I'm glad you brought that up because I feel like you definitely. I didn't realize before I just met you now that you had a culinary background, but that was very evident in the early go to market. You
Yeah.
guys are doing a lot of partnerships with chefs and restaurants in New York,
Yeah.
other places. Why was that sort of important to bringing this to market?
Because every single brand can say that they have the best product in the category that they are. It's like, that's what everyone, I have the best wine. I have the best like chips. It's like, no, no, you have no authority to say, you know who does have authority to say they have the best stuff? Brands like King Arthur Flour, because they've been around for like, I don't know, 90 years or whatever it is. Like they can say it. But if you're a 5-year-old brand, who do you think you are saying you're the best of anything? But people that have had restaurants for 30 years and have cooked with multiple products and switched, and they have some culinary authority. So if we can get them to believe in what we're doing and the message comes from them, it means a whole lot more than it coming from us.
Yeah, and that was smart. I saw you do like a pop-up menu item, for example, like I think Pasquale Jones in New York's pizza
Yeah.
maybe.
Yeah.
And it's
Yeah.
like people are already going there. It's naturally infused in the experience,
Yeah.
but it's part of that experience. They're exposed to it, and you have the cosign of a restaurant they love.
Yeah,
Um,
and Graza, it's not like it's not abrasive. It's like it's literally lubricating the
yeah,
experience, you know? It's like Graza, it's olive oil. It's already
it's very
involved in the menu.
complimentary.
Yeah, it's in the menu, you know?
Yeah, I love it.
Yeah.
I want to back up a little bit to learn more about you personally, because I know you've been in a lot of startups, worked at a lot of startups. Obviously, you're a founder now. SoFi's mission is to help people get their money right. And so I'm
Yeah.
curious, as someone who's built a business and worked at startups, what does that phrase mean to you personally? How has it evolved over time? Or maybe what are some money lessons you've learned just going through some of these startup cycles at these companies?
Oh my God, that's a deep question. Understand your equity well if you're going to work at one. Like I think that there is a lot of false promises in startup culture. So if you're going to take a bet on a company that is using equity as a negotiating tool, understand it, work with someone to understand it. I mean, money stresses me out, I think, more than anything. Still, I'm sure a lot of people share that anxiety. So I think if you're starting a business like and you're raising capital for it, be very clear with your investors on what's going on in your life. I think people will empathize more than you think. I have kids, so you know, just understanding and plugging into other people's ability to empathize is important. I don't know. It's taking that first step. It's so much of this information is just obscure because it's a literacy that if you keep away from people, more smaller people will continue to benefit. Everyone knows that.
Something which I think would be interesting to hear as a startup employee when you're looking at your equity and you're like, what is this worth? It's kind of similar if you're an investor looking at a company being, what is this worth?
Man.
So knowing what you know now, building companies, being at these, what would be some of the things you look for? Obviously, outside of making sure you understand what percentage allocation you have and all of that
Yeah.
stuff. But what are some of the intangibles that you would be like, okay, I think this company's a winner?
I don't think that there are really any in the early stages besides the people working on it, to
Hmm.
be honest. Um,
So what
so
would you look for in those people?
I don't know, like almost like, do they have rabies? You know, are they like, are they totally nuts? Are they gonna
Yeah.
work like their whole life depends on it? Will is such a powerful tool. Work ethic is such a powerful tool. So unless there was some kind of arbitrage that someone discovered, which like may be possible in AI right now, there's too many people that don't know anything. So there might still be arbitrage, but more traditional like financial services or consumer or traditional tech, I think it would be the team. Are they the hardest working people? Like I'm going to give them $10,000. Are they going to work harder than anyone else to turn my 10,000 into 20, for example?
It's a different strategy. And I think that's changing because the accredited investor rules went to the Senate that are going to change. And now it's not just how much money you have or wealth, it's also knowledge of investing and financial concepts.
Yeah.
So those barriers are being removed, but you're right, it is a different strategy. You mentioned the team. I know people on your team, and I would say you have rabid people on your team.
Yeah.
People just will do anything really to do an amazing job, and that's kind of what you look for. When you say you're team led, how does that come across in the way the company performs? Why is that so important?
And I think you see it like if there are friendships being forged in the workplace, I think you know that you're onto something because from my experience, people are not going to stick around at work if they don't feel connected to it. Even if you're like collecting a salary, like that runs out eventually. You're always going to feel like you're hiding, like you're not contributing, like someone's going to find you. So once people start forging friendships at work and working together, you're like, okay, well, not only are they fully committed, they're actually now emotionally invested in this place. And I think we were observant of that early on about the type of people we were hiring, how they would fit into the organization, into the culture. Would we want to spend this much time with them? And I think it's paid dividends for us. Then you have the next inflection point, which is like, okay, that stage has passed, and then now we need resident experts, and we need a way to integrate those people into the organization. Starting a company is really hard, primarily I think because of the personnel side and like the emotional carnage of growth and peaks and valleys in your organization. And the more advanced people that we speak to now that maybe have 20 years of work experience, they're like, well, what your team doesn't have is they've never persevered through the dark times.
Yeah.
You don't have anyone. You're just on this like momentum machine, and that's like something that we're starting to be aware of. But yeah, I think people like each other.
Honestly, that's not a bad.
Yeah.
Check out the Glassdoor reviews, guys.
Yeah. It's not happy hour. It's not like stuff like that. It's more day to day.
Yeah. I think it's similar to like a sport.
Yeah.
Teammates, those relationships endure a little different than other friendships for a reason. Because like you said, you're going through ups, you're going through downs. I know we got to let you go soon, Andrew, but I have a couple rapid fire questions.
Yes.
Before you leave, they could be first thing you think of. One word, one phrase answer. Are you ready to go?
I'm ready. Yeah.
All right. What's the best money decision you've ever made?
Best money decision I ever made was I don't know, learning from someone about like triple tax-free assets and just like comparing that to like, our 10-year treasury yield and like just the simple stuff, like
blocking and tackling.
What's better, 3.5% triple tax free or like a 5.5% CD? Like you could do that math really quickly.
Yeah, and these concepts they're not like out of reach. It's just they're things you don't normally talk about. All you need is someone to sit you down and be like, hey, this is how it goes. Yeah. What about the worst financial decision you ever made?
Oh my God, I'm probably making it right now, if I'm being honest. We're trying to buy a house in Spain, and it's so hard to do non-resident transaction internationally. It's probably where like blockchain and Bitcoin could be really, really helpful. But I guess just being emotionally committed to things too much is a bad financial decision. But then what's the value of the emotional gain that you get? Right. I don't know.
Yeah. Well, good luck with that. That's exciting. One brand you admire that you think is nailing product and story, not Graza, because we know you guys are nailing it.
Brand I admire that is nailing product and story.
Or just a brand you admire.
I think
those guys are cool.
I think still Warby. Like I think they've done it. They've done it all. Like continued education is such a big thing there. Retail expansion in their own way, retail expansion in an egoless way, partnering with Target. Like I just think that there's a lot of perseverance in that organization.
All right. Love it. Last question. Okay, finish this sentence. Venture capital should be more blank.
Oh, God. Detail oriented.
Ooh. Okay, wait. You have to explain that a little bit.
I think there should be more diligence.
More diligence. Yeah. That's exactly why we're here. It's
a
perfect answer.
Yeah.
So diligence, you mean on the side of investors and just like the information sharing between the startups and the people who are interested. You'd like to see a little less moving on vibes, more acting on data.
Yeah, probably.
All right. Well, it helps they have good data.
Yeah.
Andrew Benin, CEO and co-founder of Graza. Thank you for dialing in from Spain. We appreciate you. We love your products.
Thanks.
And thank you so much.
For sure. Talk soon,
guys. And we'll
guys.
see you guys next time on Culture and Capital. Thanks for joining.